Today I'm here with Nish Krishna and Fred Rubin, who are both part of the leadership team of LendGrow. LendGrow is an online marketplace that's looking to partner with banks and credit unions to help them source loans. Nish, can you tell me a little bit about why you started LendGrow?
Yeah, so I think the idea with LendGrow is to combine best of both worlds, bring in a FinTech partner which can offer a great digital experience, help lenders capture the online market share through online lending, and then combine that with some of the expertise lenders have on credit risk management and capital management. In the past 10 years, I've mostly been on the other side of the table at a lender such as Capital One, M&T Bank, E-Trade, and build such digital capabilities. And one of the realizations that has happened is specifically in the smaller and medium lender space, banks and credit unions, we offer such great products, better rates, but we often lack on online presence and marketing, and that's what we are trying to partner with our with our network of lenders.
What does LendGrow do exactly?
So we are a demand aggregator. We operate an online marketplace, and the idea is to, through that marketplace, level the playing field for small lenders, so that they can capture the loan demand in their local footprint. And by local, we mean like whatever. It could be as large as a couple of states, or as small as half of the state in some of the larger places. And the way we do it is we have a tech-enabled platform where the borrower comes. We are wired to the bureaus, so we are able to pull their credit history, a soft pull, and with the network of lenders that are on our platform, we are able to pre-qualify them, match it to them, and then the borrower basically goes from there to one of the lender partner and completes the loan application.
And can you tell me from the lender's perspective what some of the unique benefits of partnering with LendGrow would be?
Yeah, I think there are two big things that I think we think about. The first is it's a very customer-centric platform and experience, and that differentiates us from a lot of other competitors where we feel that lenders are horse raced. So we do not have a list of lenders that a borrower matched to. Instead, we present the best rate that the borrower can get, and it could be for a 5-year loan you could have been matched with lender A, but 10-year it would be lender B. So the borrower doesn't see a list of lenders, and our lender partners like that. Only when the borrower has made a selection, they click over and they apply on the partner's website. So that's how the experience is. The second big thing that our partners like is they are in firm control of their credit footprint and experience, right? So we are in business of helping the lenders connect with the borrowers in their footprint. We do not dictate, like if you are with some of the other choices out there, you have to trade off your experience or brand. So you are in firm control of that. You are not getting a borrower from, let's say, your Midwest bank sitting in Midwest. You're not getting a borrower from West Coast, East Coast, and so that aspect of LendGrow is also very attractive to our lender partners.
So you talked a little bit about the demand. Can you expand a bit upon how you're sourcing these customers and what the demand is in the local partner's footprint?
Yeah, so it's basically a proprietary hyperlocal targeting capability that the team has built over the years. Before LendGrow, for example, at Pentagon Federal Credit Union, where I had the opportunity to set up a lending business, we grew the business from $250 million in loans to about $1.2 billion, and PenFed had some similar challenges. And one of the things we discovered is hyperlocal targeting capability is very helpful. We do a needs, means, and readiness modeling for the borrower, and we target those borrowers that are actively shopping for a certain type of loan, and that way we are able to capture the borrowers in the footprint. I mean, it's nothing. Some of these capabilities can be built in-house by the lenders, but in my experience over the last 10 years, what I've seen is it would take you about $1 million or so, people, data, and technology to put it together, And what the opportunity that our lender partners have is to use a common platform and capability to sort of capture market share that is probably going to some of the bigger banks and online lenders.
From the lender's perspective again, how is this different from a whole loan repurchase program?
Yeah, so there are, if you are a very small lender, like let's say, and which we define as under $1 billion or much below $1 billion, you have options such as whole loan purchases and participation. I mean, it is frankly used by some of the larger lenders as well. I think the big difference is that in a whole loan purchase or participation program, there is a one-size-fits-all approach. It's dictated by the online lender that is originating the loan, and you just have to accept an ABC paper, and so that's the level at which you are controlling. It's not your brand; you're purchasing it back end, so you're getting disintermediated from your customers. And today you are getting disintermediated for personal loans or student loan refinance. Tomorrow, it's going to you will get disintermediated from some of your cash cows, home and auto. I think with partnering with LendGrow, what the opportunity you have is that you are not earning a loan, you're earning a customer, right? Typically, we see 10 to 15% in cross-sell rate from the customers that we bring to our lender partners for the other products that they can sell.
Great. And can you tell us a little bit about who LendGrow's customers currently are?
Yeah, so I think the customer that are most attracted to us are basically looking for a partner for online growth. And the other thing that they are looking for is attracting some of the borrowers and millennial generation that primarily shops online these days. So those are the two types of needs that our partner have. We work with both banks and credit unions. We have over about 5-6 lenders in our network right now, and we are planning to bring another 5-6 that are in the pipeline in the next couple of months.
So Fred, you've served as the Chief Credit Risk Officer for major banks like Pentagon Federal Credit Union, and you're the Chief Credit Risk Officer for LendGrow. Can you tell me a little bit about why LendGrow is important?
Yeah, in my experience with risk over the past decade, I've seen smaller lenders struggle with keeping market share as lending has moved online. In addition, they don't have very large marketing or analytics groups, so we bring that to them.
What does it take to get started with LendGrow?
Well, actually, it's a fairly short process. You supply us with your desired geographical setting and your credit policy, and we set it up from there. We can interface with most core systems like Jack Henry and Fiserv, and we also provide some other online tools if you need them.
What areas of growth are you seeing across LendGrow in terms of what products are the best for lenders?
So right now we offer personal loans, student loan refi, and later we'll have auto and home products as well.
And can you tell us a little bit about lenders who don't have these digital integrations or potentially even a digital application?
We can provide them with a white label process to bring customers directly to them and interface with their core systems. We even provide some other online tools like fraud detection as well.
Why do banks and credit unions like an idea like LendGrow?
We can get them into the online marketplace fairly simply and at a low cost. And we provide them with customers that fit their risk profile as well. So they're not really changing what they're looking for. They're just getting a bigger tent of people and a bigger forum to put their ideas out into the market.
How do borrowers respond to a product like LendGrow?
We've had very good reception from the borrowers. We're up to about $5 million daily in leads. And we only have, at this point, 5 lenders across the United States. We're always looking for more lenders. And so at this point, we're ready to scale up.